Hello, everyone. Good afternoon to you all, and I hope you having a wonderful weekend. I'm so excited to welcome you to yet another promising video tutorial on the US oil. After enjoying a whooping over 1,000 pips during the course of last week's trading session, as we took advantage of this bearish momentum right down into the $78 mark. For those who would like to have a peep into how we took advantage of this trade, I will be sharing the link to this video right in the comment section of this video. And on that, in that link, you are going to be seeing how we'll be seeing the daily commentaries on how we took advantage of each of the opportunities that presented itself during the course of last week trading session. As you can see here, price moved to the downside in our favor before we closed the week right below the $79 area to for the week right here. So I'll be sharing the link in the comment section for those who would like to have a peep into how we plan this. So with that being said, let's dive into the current structure. Let's see what is going to be happening. What is my expectation as we head into the new week? Now, looking at the structure here on the daily time frame, well, the first thing we will observe here, the very first thing we will observe here is that price action finally broke down this very important key level at the $85 mark. And one thing I would like to say here is that I did some little adjustment around the key level here. Remember last week we had the key level at the $86 area, but because of the activities that happened last week, I adjusted it right below the $85 level because of how this level has been holding buying pressure for some time. In fact, we saw the same thing happen a couple of weeks ago. So I had to do some adjustment to fit into the current structure. So with that being said, what is going to be our expectation for this week? Well, like I said, look, if first thing I observe here is how the candle on Friday closed. It closed in the form of a hammer candle, which has a tendency, which has a traces of bullish momentum in this area. And if we look into the past, I think somewhere in the month of September, I think the later part of the month of September, we also saw buying pressure around that area. So if I extend that demand zone to the present moment, we can see that price is right within that demand area, and the possibility of a trend continuation to the upside is very possible at this point. Now, with that being said, I have a couple of scenarios that I will be looking forward to as we head into the New York session. Well, the first scenario is a setup that might likely look like price coming back to do a retest of either the $85 or the bullish trend line to send price crashing to the downside. That is one scenario. You know, from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that one point in time price might likely come back into that structure, evolve into a reversal pattern, followed by selling pressure on our lower time frame to send price crashing to the downside. So that is one scenario I will be looking forward to going into the new week. Now, the other scenario is that we might be having a situation where this demand zone here could be broken to the downside. That is taking out all the buy position right around the $80 and the $78 area to incite a bearish momentum, after which a retest of the structure followed by selling pressure on lower time frame could send price going further to the downside. So this is the second scenario I want to be looking at as we head into the new week. Now, there is one thing I was able to figure out when I scaled up a little further to the monthly time frame. And remember a couple of months ago when we identified this bullish trend line on the charts, which was a reflection of the OPEC Plus decision to cut oil production. And from the look of things in the last couple of months, it doesn't appear that this decision has any major impact on this chart. As you can see, as soon as price got into the $93.50 level, we started seeing selling pressure from that area. What it simply tells us is that every attempt by the buyers to push price right above the $93.50 level has been met with strong resistance from the sellers. And in fact, not only negating buying pressure, it's even pushed price further to break down the very important key level at the $85 area. So at this point in time, I started thinking that are we likely going to be having a crash at this point in time? So what I did here was to scale up to the monthly time frame to see what has really been going on in the past on the US oil. And if we zoom out to the monthly time frame, one thing I observe, which is peculiar with the current structure that we are here right now, is the fact that as soon as price drops into the $90 area, we saw a huge bearish momentum that took price to the downside here. We saw this happen in 2008 during the financial crisis. And then we also saw the same thing happen here in 2014. We saw the breakdown of that structure. I think this happened during the time Russia took over, annexed um, Crimea. I can't remember that country, anyways. And we are at the same area now where price is right below the $90 area. And if we look closely into the structure here, we can see that price has broken the bullish trend line that has been holding bullish momentum in the last 2 years. You can see we had this bullish trend line figure out, and price appears to have broken that bullish trend line to the downside. So at this point in time, there is a tendency that we might be having a further trend continuation to the downside at this point. Now, scaling back to the daily time frame here and looking at what current structure we have here, like I said earlier, we might be looking forward to a bearish momentum here. So price might likely break down this demand zone, retest of structure to same price crashing further to the downside, or we could be having a situation where price climbs right back up into the $85 area, or probably the bullish trend line that was broken during the course of last week trading session, whereby price evolves into a reversal pattern with selling pressure right below the $85 level on our lower time frame to incite another wave of bearish momentum at this point. So, in as much as we are looking forward to this bearish momentum, well, there is a tendency that we could be taking advantage of this counter trend opportunity, as we can see the candle here closed in the form of an hammer candle, which has traces of buying pressure around the $80 area. So we might want to take advantage of this move too as well, which might likely give us about, let's see, about I think about 700 pips thereabouts that will likely happen around this area. And one thing I did here is to scale down to a very low time frame to see what really happened here to decipher if we could be having a counter trend opportunity. And as a result of this, I scaled down to the 15 minutes time frame where I identified a reversal pattern right around the $77.50 level, as you can see here. So we had this impulsive move that took price right out of the $85 level right back into the structure. And we saw the first touch here, price came here. We saw the second touch, as you can see, price found a higher low. And then we had the breakout of the neckline at the $79.30 level. And whenever we have a breakout of a structure like this, we expect that price might likely come back, do a retest of that structure to incite a bullish wave, which might push price back into the trend line that has been holding selling pressure in the last couple of weeks now. Let me scale up to the 1 hour time frame so that we can see what I'm talking about here. So we can see we had this trend line that has been holding selling pressure since for the past 2 weeks now, and in fact it held selling pressure throughout last week, which we took advantage of. So we saw this trend line here. So there is a likelihood that price might come back into that trend line, and that trend line also shares a confluence with the $85 area. So we still want to see how price is going to be relating to this area during the new week, after which we want to be making further decision of probably selling if we sight reversal pattern there, or buying if price breaks out to retest of that structure to the upside. Be rest assured that I will be jumping in the comment section of this video to give you an update of how I intend to trade this after monitoring how participants in this market will be relating to this current structure during the early hours of the new week. If this video has been of immense help in making your own individual decision on the US oil, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Dark Sherry so that you don't miss out on the regular updates I normally share in the comment section of every video. Do have a wonderful evening, and I hope to see you right here in the comment section on Monday as usual. Bye bye.